Like they are now the dominant players in the game. It used to be the legacy brokerages were the ones sponsoring the teams. The legacy brokerages were the ones who were giving out equity deals. And now the brokerage business seems to have taken such a hit. The regulatory environment's probably taken such a hit that FTMO was able to swoop in. And so, is this the future? Are prop firms going to take over the brokerage game? I think that's something that we're going to see more and more of as brokers start to lose steam because of the regulatory environment and they need to get money and they want someone to buy them out. Who has the money now? It's the prop firms. So, very bright future ahead for the Forex prop firm space and very exciting to see. All right, so Fed Chairman Jerome Powell testifies on the semi-annual monetary policy report before the Senate Banking Committee. This should be fun. We'll stream this for sure. 10 a.m. Tuesday. Fed Chairman gets dragged in front of the Senate Banking Committee. Then we have CPI. This is a pretty busy week here. We have core and CPI dropping on Wednesday. Expecting a little bit of a slowdown in the CPI, the headline CPI number. The core CPI number, which kind of excludes food and energy, the volatile components of the CPI, those expecting a slight increase. This makes sense. We are cutting a lot of ties with some of the countries we're historically buying oil from in order to kind of increase domestic production. And so in the short term, we are going to see supply chains take a slight hit. And so that's going to impact food, that's going to impact gas prices. And so there is a short-term inflationary component to this new Trump regime, which is number one, we are going to be boosting domestic production, and that means more jobs for Americans. That means everything is kind of staying here. But on the flip side, in the short term, there has to be a hit. There has to be a little bit of a price hit because if we're buying all of these agricultural imports from other countries, if we're buying all of our basic manufactured goods, medical supplies, pharmaceutical precursor, chemicals from China or from other countries that we're now going to be in trade wars or some kind of contention with, those supply chains get hit, the consumer will pay the price. And so we're going to start to see the inflation become a bigger component here of the conversation in the next few months. The House Financial Services. Okay. So he's going to be in front of the House or in front of the Senate on Tuesday, in front of the House on Wednesday. This should be pretty interesting. FOMC Waller is speaking. Oh, speaking about stable coins. By the way, I mean, this is not even by the way, this is part of kind of relating to what Member Waller is going to speak about, is that crypto has become a very big topic of discussion in the White House. They created the AI and crypto department, I guess, and they basically want to make America the capital for crypto innovation. So, as part of their mandates, specifying exactly what these things are and putting them in the proper categories is their number one priority because a lot of countries or a lot of companies have left the US to go build overseas because of the lack of clarity in the regulatory environment. Are these things, is this a commodity? Is it a security? Is it a currency? Is it a collectible, tradable, whatever it is? And because of that lack of clarity, honest companies who do want to follow the rules were forced to go overseas. That we're going to see them come back. The first step is they said they want to target stablecoins because number one, it is a currency, and that's kind of the easiest for us to build a framework around. Whereas tradables, digital commodities, and commodity derivatives and things, we're still sort of figuring out where everything falls into which bucket. Okay. And so the stablecoin conversation from Member Waller is actually very interesting to me because this is kind of the first step. I think if stablecoins get figured out, then the rest of the market structure is going to get established because people will sort of have something to anchor whatever they're launching to. And there's going to be a pretty clear framework that you have to follow. Which regulatory agency is going to oversee stablecoins? So pretty good conversation there. Now, every time that we have CPI, we also have PPI, the Producer Price Index, the Producers Inflation Index. So we'll keep an eye for that. And then we also have retail sales dropping on Friday. This is actually pretty interesting to watch for. Trump has promised to bring GDP growth up, which means that if we're measuring GDP growth with three things that we can look at here on Forex Factory. Retail sales is one of them, corporate earnings is another one, and GDP. Like, really, it's just going to be, are people buying stuff? Do people still have jobs? And is the overall GDP, the overall production of the country improving because of, let's just say the either productivity increases by bringing everything on shore, or honestly, I think that a lot of the GDP growth that we're going to see, by the way, just you know, it's time, like when everybody is kind of like clapping Trump on the back, this is time for me to sort of start to get critical, where I'm looking at where are the mistakes that we're going to have to pay for down the line. And I think a lot of the GDP growth that we're going to see in the next 3 quarters that they're going to keep bragging about is going to be caused by inflation. Because if everything is costing more, the companies are going to make more on a nominal basis. And if everyone's getting paid more monies, then the GDP on a nominal basis goes up. But that can happen because of productivity, so things are actually getting more productive, or it can happen because of inflation, which is same amount of productivity, but because everything's more expensive, then it kind of reflects in the growth numbers. Okay, so something to really watch for. Let's hop on over to the charts and see what we have here. If you're watching this, welcome to the live streams. Make sure you hit subscribe so you can get notified whenever we go live. Do live market trading, live market updates, and market outlooks like we're doing now. Of course, if you guys are in Colombia or near Colombia, make sure to check us out on the website, FXSummit2025.com. Register for the Bogota and Medellin events coming up February 15th and February 21st. You guys will not want to miss out on those events. All right, we had tracked this Euro USD trade sometime last year, if I can remember here. It was September of 2024. Beautiful double top at the 88.6. We had market drop, hit TP1, hit TP2, and then hit TP3. If I was to put up an extension level, I'm very confident that we've just hit the extension as well. Yeah, we just hit the negative 27 extension. So is it time for the DXY to start retracing back? I believe so. So I think that we can finally see Euro USD off of this double bottom start to retrace back to the upside. So if you guys are looking for swing trading opportunities on the currency front, definitely check out the dollar crosses. I think that they have a pretty good potential here going into the next 2-3 weeks. DXY, we're going to have to go up to the daily time frame here. Okay, in order to take a look at this. So we're overextended above that range that we've been looking at for a while. The only thing that would give me some pause if you guys are going to trade any of the US crosses is this double bottom right here. Okay, we've seen this before where we kind of have this head and shoulders formation. And then we have this beautiful 88.6 wick here. But then if the market continues to create support, especially off of this double bottom formation here, we could go a bit higher before we see that crash to the downside. Now, I always believe that, especially part of, kind of our philosophy here at Chart Addicts, whenever the market is above the resistance of a range, where most people are looking at the bullish signs, which is support being created, I'm always in favor of the market coming back inside the range before I assume it's just going to continue off a break and retest. And so if you're going to trade US crosses, first, I'm looking at these short-term sells. If the market breaks above this wick and fills this wick right here, then we're going to go up and see maybe 111 or 110. One more extension, probably equal sized to this previous impulse. You can copy and paste this thing. Kind of draw this, put this here. It'll put us at about 111.5. For Chart Addicts members, that's probably the 88.6 from top to bottom. Gonna have to draw this thing to the bodies here. About the 88.6. And so if we do get an expansion here on the dollar, equal sized impulse from the previous impulse here, that'll put us about 111.5, higher time frame 88.6. That's where we could see the real correction back to the downside. And so my first assumption is that we're going to do this one. So option one. Okay. And then option two is going to be this extension right here. Okay. Put something in the chats if we're clear on the DXY. Obviously, we're extended above the resistance. We're creating some, I mean, we're definitely having a lot of indecision here between the buyers and sellers at the 61 as well. And so option one would just be a pullback into the range. Okay, then it can continue after whatever it is, but that's my first assumption. Then if the market does fill this wick, then we'll just look at the 111.5 and then it'll be very straightforward. And you can translate this to Euro USD by the buys are going to be the most likely thing to happen now. And then if the market does break that extension on Euro USD that we just saw, then you can look for a deeper extension level at the negative 61. Okay. Seems very straightforward. Make sure that if you guys are watching on YouTube, drop a like so that YouTube lets people know that we're going on live. Let's do a quick bit or crypto update, and then I can take any questions about what's happening, USAID, Doge, some of those kind of key components. So I haven't looked at Bitcoin in a while, but what we can see here is beautiful neckline of this range. Then we have the support of the range right here, and then we have resistance. So we've established a discount, we've established support, we've established resistance. We have not established a premium yet. There hasn't been a, besides this wick, could technically be considered a premium, but I guess yeah, that is our premium now. Okay, so beautiful range here. If I was to draw fibs from the bottom of this neckline to the top, here's the 88.6. Absolutely beautiful, beautiful touches. Then we had a retest of the 78 and now a retest of the 61. I genuinely believe that this wedge here is going to break to the upside, especially with the coming announcements of the White House's kind of decisions on crypto. They're signing executive orders to basically commit to being the number one leader in crypto, but that doesn't really mean much. Now that they're actually going to target specific sectors of the crypto market, let's say stablecoins specifically, and then they'll go into DeFi, decentralized finance, or probably go stablecoins first, then cryptocurrencies, currencies themselves, things that are considered competitors to the dollar, because those have to be regulated under the currency markets and the CFTC. And then you can have derivatives next, which means options, futures, swaps, any derivative contracts built on top of these underlying securities or currencies. And then you can start to target things like collectibles, commodities, and the rest. Now, Bitcoin is currently regulated as a commodity by the CFTC, but the CFTC as a regulatory agency is kind of spawned from agriculture. And I was telling the squad this earlier, like the Department of Agriculture has a huge influence on the CFTC, and the Senate Agriculture Committee is the one that oversees the CFTC. And so I don't know if Bitcoin really belongs in that category. Maybe Bitcoin should be regulated as a currency as opposed to a commodity. And then that would put it under the jurisdiction of either the SEC or a FINRA or maybe even just the Treasury. Okay. So we're going to see a lot of those announcements coming up. I have a very good feeling about this wedge breaking to the upside. We have an 88.6 right here. And so crypto follows Bitcoin. And so if the Bitcoin price is going to go up, we can expect that a lot of other currencies will follow suit here shortly. Okay. XRP, a bit different, but same. We kind of had a massive liquidity wick. This was very savage because I have some close friends involved in some very high profile trades all the way from 50 and then some from even earlier, but they have 30 lot trades sitting at 50 cents, and then they have other trades kind of in this range. So I've been kind of watching XRP more closely than I otherwise would. Now, very straightforward stuff. If you guys have been trading with us, same exact principles apply. Go ahead and draw the fib from top to bottom. And what we can see here from bottom of this impulse to the very top, body of the candles are all closing above that 88.6. All right. And then where is that TP1? It's always right there at the 61. So we're getting a front row seat here as that the market is respecting this fib sequence. And so if we're trading this on NASDAQ, what would we expect to see? Personally, I would expect to see a double bottom here at the 88.6, So one more entry opportunity at 215, and then a push to $2.80, and then $3.39 would be that final sort of price, right? If you really want to find a good target, you just reverse the fib, $3.23. I'll go ahead and add that zone just so we can keep track of it later. Beautiful. Okay. This makes sense to everybody. Put a one in the chat if we're good on cryptos. Things are looking really, really good. Price is holding these supports. Could price have a massive dump because folks are just trying to get on the sidelines before these regulations come out so they can buy the hype and they can kind of buy it at the bottom? That's a possibility. But if we're just going off market structure right now, market structure is signifying a continuation. I think that this retest kind of shook a lot of scared hands out of the market. And then institutions and kind of high profile buyers are buying as much as they can get their hands on. Okay, so my base case scenario, bullish. There is always a chance that something could happen, and so we will be prepared. But I will be buying up cryptos as much as I can whenever they hit these discounted prices. So if I can go into my Coinbase account, for example, and I can buy anywhere in this price range from $1.90 to $2.15, when this thing finally starts to move to the upside, I'll be in profits regardless. Okay, now if the market does break down, then we have other zones to watch for. Okay, these support areas here, we can look for potential retests and then buying at predetermined support levels. That's how you can make money in these markets. Well, this is how I've historically made money in these markets. It's not just picking the right coins because you'll never know what's going to really perform. It really is a giant guessing game. But what you can do is make sure you're not buying at premium prices. Buy when the market is either at these lows, or what I do is I take profits on the upswings. I don't try to buy into the upswings. And if the market does have a savage retracement, then I can look at that as being an establishment of a new low. Okay. So now I'm not buying into a bullish trend. Okay. This is now high and this is now low. So because this is now a discounted price compared to this new kind of range we're playing in, I wouldn't say I'm safe. There's no safety in investing, but I would say that I'm making a much more competent choice, a much more high probability choice. I'm making money if I'm buying at those discounted prices. So pretty good rule of thumb for any crypto token, no matter what you're trading. Dude, this is blowing my mind that gold has reached this extension level. I had an upside target of 3,500 for gold at the end of this year, and then $5,000 price target for gold over the next 5 years. We might hit that $5,000 price target way sooner, depending on inflation. So for now, look at the dollar. If the dollar begins its retracement, then gold will too, right? And vice versa. Because usually the dollar and gold used to move opposite of each other. Because essentially you would sell one for the other. Now they both kind of occupy the same space. And honestly, gold is way, way better to hold than cash. That we know this. But typically, folks are worried about instability or there's some kind of uncertainty in the global markets. They'll get out of high risk assets, meaning stocks and cryptos, and they'll typically get on the sidelines in cash or hold their money in gold because gold at least outperforms cash because it outperforms inflation. And so they're kind of they used to occupy that sort of, an opposite thing where you would sell your gold for dollars. And so dollars would kind of move in one direction, gold would move the opposite. And now they sort of are back to occupying a similar space where you've seen the dollar on a massive rise here. And then you see gold doing the same. And you see the high risk assets like Bitcoin and those, they have been on a bullish tear, but now they're kind of in this middle ground. So what does it mean when all the assets are moving in the same direction? Not all, but a lot of them. Well, what's not moving in the upward direction? Euros. Let's go check the Japanese yen. Well, the Japanese yen had a very savage kind of correction here after the bond operations that the Bank of Japan issued and tried to basically kind of stop the collapse of their currency. And then kind of had this nice like little retest, and now we're seeing this double bottom potential move to the upside. And so it looks like the Japanese yen is becoming slightly more attractive, but the euro is getting dumped. Let me take a look at other global currencies because I haven't actually done this. Let's see how the pound has performed against the dollar. So the dollar has significantly outperformed the pound. The pound has been going down while the dollar has been going up. And so people are dumping these European currencies as they should. I'm going to give you guys my own advice here. This is my own fucking opinion. Europe, trash place to invest. The regulatory environment, unbearable. The hurdles that you have to jump through, unmanageable. The culture of entrepreneurship and rewarding entrepreneurship, non-existent, right? The principles of meritocracy, gone. And so it would make sense that you're having the Japanese currency kind of having a rebound. You see gold, the dollar, and high risk assets like crypto and stocks going up because they're like, but what do we invest in? I'd rather invest in these risky US based kind of investments like the dollar and the stock market rather than invest in any of these global currencies that are in collapse, like the pound or the euro. So if Great Britain had done Brexit correctly, they would have ideally avoided this, which was kind of the whole point of Brexit. But they never really committed to the Brexit agenda after. They kind of just celebrated too soon. And so they're kind of dealing with the same currency collapse as Europe is, or as, yeah, the European Union is. Now, with that being said, this kind of even more so confirms the DXY retracement. Look at this. We have a beautiful area of daily support right here. And then what do you see? We have phase one, phase two, and phase three. And then from the bottom of this support to the top, look where we're at. Okay, so we're at an ideal entry price here for a correction back to the upside. And so this would further confirm the dollar going down, maybe Euro USD, GBP USD, kind of retracement back to the upside. Those are some pretty good swing trades that we can watch for if you guys are currency trading. Okay. So that's the tour around the world, what we're seeing, what we got going on. NASDAQ, I already did that with the squad, covered this and the trades that we're watching. We're going to be looking for some really good opportunities here in the next coming days. And so the first one being members, the first one being right here. Okay, you guys know exactly what this means. So we'll keep an eye out. Excited to be trading with you guys again, really getting things back up and running. If you guys are interested in being part of the FX Summit and joining us, go head over to our website, fxsummit2025.com, and then hit get involved. You'll find some opportunities there. If you guys are in Colombia, know someone in Colombia, make sure to tell them about our Medellin and Bogota events, February 15th and the 21st, all on the website for you guys to check. And of course, if you're in Mexico City or going to Money Expo, catch us and the Chart Addicts team there live. Looking forward to being back on streams with you guys. Drop something in the chats. Make sure you guys boost the comments section whenever you see a video drop. And then let's put out some great content this year. Back to full force, back to full focus, and excited to have you guys here for the journey. Almost at 100K subs on YouTube. So make sure you guys hit that subscribe button. Members,